Let's do midweek business on Business Morning at the meeting places right here on Channels Television. Good morning, Amini John Mekwa. It's going to be a very busy day today, so let's have that at the back of the mind, because we expect that the Minister of Finance will give the breakdown of the 2023 budget, which is proposed to be, of course, 21.83 trillion naira. Once that begins, we will switch. Even before it begins, we'll have our correspondent standing by there. Linda Igbe is in Abuja, and she will bring us up to date on some of the expectations. But before we go to her, oil prices edged lower on Wednesday after slumping in the previous session, weighed down by concerns about weak demand because of the state of global economy. Brent crude futures for March delivery fell 13 cents to $81.97 a barrel, and that's a 0.1% loss. U.S. crude dropped by 28 cents, which is 0.3%, to $76.65 a barrel. The Chinese government increased export quotas for the refined oil products in the first batch of 2023, and that signals expectations of poor domestic demand. Industry group American Petroleum Institute is also due to release data on U.S. crude inventories later on today at about 8 p.m. And from there, we'll come to Nigeria, where the headline Purchasing Managers Index of Nigeria's private sector climbed to 54.6 in December. That's up from 54.3 in November, signaling a marked monthly improvement in business conditions. The headline figure, derived from the survey by a financial institution Stanbic IBTC, shows that operating conditions of business also strengthened to their highest level since April last year. At the same time, business confidence picked up from the previous month, recording low, while purchasing activity increased in each of the past 30 months. Meanwhile, employment rose for the 23rd successive month by slightly in December, as rising workloads and efforts to ease pressure on existing staff members encourage companies to increase their workforce numbers. Improvements in demand were sustained despite rising prices on fuel and raw materials, while new orders increased rapidly in the final month of 2022 amid strengthening customer demand. Well, yesterday in Nigeria, the President, Muhammadu Buhari, signed the 2023 appropriation bill into law. It's a total of 21.83 trillion naira. The President gave his assent to that, also to the supplementary bill, 2022 supplementary bill. That's about 819 billion naira. And also, what we've been talking about, the finance bill, 2022 finance bill, was also assented to by the President. Let's see the details of all of that in this report.
It is the first workday of 2023, and the President begins the year by presiding over the signing ceremony of the final budget of his presidency at the Council Chamber. Themed a budget of fiscal sustainability and transition, the President, flanked by the leadership of the National Assembly and some members of the executive, then signed the 2023 appropriation bill alongside the 2022 supplementary budget into law. The President remarks that in spite of his signing, there are concerns bordering on changes to the executive budget proposal made by the National Assembly, which needs to be addressed.
I have also noted that the National Assembly introduced new projects into the 2023 budget proposal, for which it has appropriated 770.72 billion naira. The National Assembly also increased the provisions made by ministries, departments, and agencies by 58.55 billion naira. Nonetheless, considering the imminent transition process to another democratically elected government, I decided to sign the 2023 appropriation bill into law as passed by the National Assembly to enable its implementation to commence without delay. I have, however, directed the Minister of Finance, Budget and National Planning to engage with the legislature to revisit some of the changes made to the executive budget proposal
The president made clear that the budget design takes into consideration strengthening the economy as well as smooth conduct of the elections and transition. He equally urged the legislative body to reconsider its stance on the proposed ways and means advance from the Central Bank of Nigeria.
Failure to grant the securitization approval would, however, cost the government about 1.8 trillion naira in additional interest.
The leadership of the National Assembly subsequently responds to the president's earlier request.
While we are trying to consider and pass the request, we will insist on getting the right documents for our committees to ensure that whatever the advice has to do in the two chambers are based on information and knowledge and not just passing ways and means without knowing what it is.
The executive did everything they could, and we have even a wider view, a bird's eye view of what's going on in all the agencies, and we have also complimented what the executive has done. There's no you did, you didn't do, no, it's all for the good of the country.
Now, as a matter of routine, the Minister of Finance will give a breakdown of the 2023 budget at least before Wednesday, but more importantly, it appears as though the executive and legislative arm have decided to take up the challenge of ramping up the nation's revenue and minimizing deficits. Now, these are critical issues they say will receive utmost attention before the end of this administration. From the presidential villa, Gloria Umezuke, Channels Television News.
So that breakdown that Gloria is referring to is what we are waiting for now, waiting, the arrival of the minister and others who are supposed to be at that meeting to give us the breakdown of the 2023 budget, which of course we now know is at 21.83 trillion naira. Shortly we'll have our correspondent who is at the venue, Linda Igbe, give us expectations from that meeting. But just before we go into that, we're waiting for Linda to join us. I believe we should have Linda in a short time. It will be good to have her at this time to tell us the expectations, and perhaps we have started seeing arrivals at the venue even before the minister gets there. That's Mrs. Zainab Ahmed, who is supposed to give the breakdown of that. And I know that one of the conversations that will be going on around there would be how well did the 2022 budget, because I remember us also bringing the breakdown of 2022 budget, and now we're talking of 2023, and we still have that supplementary budget, also that was just assented to by the president. But anyway, we have Linda now ready for us. Hi, Linda. Good morning.
Good morning, Ini.
Yeah, so we are waiting the minister, I believe, but what do we have on ground at this time, and what are we expecting?
Hello, Ini, if you can hear me. So we are here at the Ministry of Finance, where the finance minister will soon be giving a public presentation and breakdown of the 2023 budget, which President Buhari signed yesterday at the presidential villa in Abuja. He signed a 21.83 trillion naira budget in the presence of the leadership of the National Assembly and other government officials. Now, the budget, the 2023 budget, is an increase of 1.32 trillion naira, which President Buhari initially proposed and brought to the National Assembly in October 2022. Now, in a few minutes, the finance minister will do a breakdown of the 2023 budget. But first, she's expected to review last year's budget performance, particularly in terms of capital and recurrent expenditures, as well as revenue performance. Now, for the 2023 budget breakdown proper, she is expected to do a sectoral presentation. That is what each sector of the country, of the economy, is expected to get. Sectors like health, security, social investment, education, and that sectoral breakdown would also be a comparison between what they got in 2022 and what they will be getting in 2023. Now, this is to note if there has been any increase or reduction in the appropriation for these sectors. There would also be talk about the critical issue of funding the 2023 budget. As you know, Nigeria has a budget deficit of 10.78 1.82 trillion naira. And we hope she will give more insights into the problem, as well as address the problem of the rising debt profile, revenue shortages, which all of these are all linked together. Now, beyond examining this issue, the expectation is that the finance minister will talk about how the federal government will source revenue to fund the 2023 budget, as well as the role of subnationals and parastatals in funding the 2023 budget.
Well said, Linda. Yeah, thank you so much, Linda. Well said. A whole lot to expect from there. And just as I had thought, we'll first of all look at the implementation of the 2022 budget before we now move to that 2023. But that is what we will be getting on. I mean, whenever the finance minister starts, then Business Money will have to hook up to that. So we'll just make the most of the time that we have right here on this side of the program. And that's why we're talking about, still connected to that, of course, as we know that one of the document that got the assent of the president yesterday was the finance bill. We've been talking about that since we started the program on Monday. Another aspect of that finance bill is what would affect consumers. So ahead of consumers, you have taxes, you have bills that could affect your spending expenditure this year. That's why we have the Chief Executive Officer of Consumer Metrics, as the name implies. He speaks for consumers. Mr. Muiwa Ayo Jimmy joining us in the studio now. Good morning, Mr. Ayo Jimmy. Happy New Year.
Lily. Happy New Year to you too.
Yeah, so we've been talking about the finance bill and especially some of the other bills, how it will affect corporate companies and all of that. You speak for consumers. We have some of them that seem like they would really have direct impact on consumers. For instance, we have the National Food and Safety Quality Bill, we have the cassava flour mandatory, we have the raw materials research, we have the Nigerian Economic Diversification Bill. Make your choice, and let's start from there.
Okay, so maybe I start on this note that hopefully at the end of the year, we hope that consumers will breathe. Okay, so picking the diversification bill, for example, that bill seeks to impose 2% taxes on all business imports. Now, what that means very clearly is that no matter the strata of raw materials, you would have an impact within the value chain. Already we have disruptions within the logistic value chain, the raw materials value chain, and whatever. If you also pick the other bill that speaks to the National Youth Service Corps Bill. The Youth Service Corps Bill is proposing to impose 1% of companies' profit net taxes. Okay? Now, what does that do to the entire value chain of consumers generally? It's going to be a spiral effect, coupled with the foreign exchange volatility or unavailability anyway. Okay? And all of these bills, beyond the finance bills, are always passed overnight. Okay? So the organized private sector would wake up in the morning and see that some of these bills have been passed. You pick the National Food Safety and Quality Bill, for example. Okay? That bill should be dead on arrival because you have a sister agency that is already established for that purpose. You've got NAFDAC. They're also a food regulatory body. You have some of these other bills like the Independent Warehouse Licensing Bill. It imposes additional burden on warehouse owners. Okay, today, as far as I know that the customs license bond warehouses. So for you to have a standalone independent warehousing bill that seeks to do what? That seeks to impose license costs on businesses, that seeks to also mandates that when you're applying for the licenses, you publish in minimum of 2 national dailies. I mean, these are costs to businesses, and these in turn will spiral even to consumers.
Yeah, because at the end of the day, I believe businesses have consumers to pass it on to. consumers, I don't think income is increasing anyway. In fact, what it looks like is the naira is losing value. Income is losing its value.
It is, and a research has shown that, consumers will generally have a pushback whenever there is price increase in products.
What kind of pushback can we expect?
Okay, so for some of these products and services, the consumers are now better aware. I mean, if you take one of the products that you see in traffic, it used to be fat and tall. Now is not only thin, but you can find it within the sheets. If you pick the toilet roll, typical toilet roll, the standard is it should come in a double ply, multiple sheets, over 300 sheets. Today is just one roll and then thinner sheets. Okay, so, but there's something that is quite important. Because today's consumer is becoming aware, not only of what value should be, while they understand that within the value chain, government, there will be increase in taxes, there will be these, they still expect that organizations will think through the box, think out of the box, and say, this is how we're going to be able to support consumers. And that's going to be a focal point, even in 2023. The Nigerian consumer would want to see the consumer governance structures of organizations. In the year just rolled over, out of the 10 most profitable companies in Nigeria, 99% of them, 9 of them were banks. Okay? So I would assume that given some of you were talking about the pushback, given some of the realities that the consumers have seen within that sector, for example, you would expect that certain charges are removed. Today in the world over, nobody charges you for maintaining your account. Nobody charges you for withdrawing monies in ATMs.
Telco charges.
Nobody charges you for all of that. So we begin to see that in the emerging.
Yeah, but you are for consumer rights. We're not hearing your voice. What are you doing? The finance bill has been assented to. That means it's a law now. So what can you do?
Okay, so at Consumetrics, we would keep having research that informs the consumers. Consumer choices are quite important. And that's one of the things. Do you
speak to the government? Do you have meetings with them? Because that's where this is coming from.
Yes.
So, I mean, even if you enlighten the consumers, but the government has made this a law, then the consumer would still have to abide by the law.
Okay, so we have organized private sectors. We're a private company. Mm-hmm. We have organized private sectors whom we're starting to work with. Because the reality of today, Amy, is the fact that as we speak, because of the dwindling resources, government would look for ingenious ways to increase taxes. Rather than the policymakers advising them to increase the dragnets, they are increasing the taxes. And what is potent, to answer your question, for us to be doing at this point is to create a corresponding charter of tax reliefs. So on one hand, you have the government with all of the 1% here, 2% there, and all of that. And then as organized private sector, you have another dashboard that speaks to reliefs that you should be enjoying. So those are some of the things that would agitate the consumer space in the course of this year.
So it looks like taxes will make a major part of conversations in this 2023, at least for the first half of the year before the new administration. Then we'll see what the new administration can do, to help all of this. But thank you so much, Mr. Muyiwa Jimmy, the Chief Executive Officer of Consumetrics. We'll certainly be following you to task you on that consumer rights that you say you're protecting.
Very well.
All right. Yeah, thank you. So we'll just take a short break now. We'll be back to do a little bit of AFEX while awaiting the Minister of Finance. We're expecting her to give us a breakdown of the 2023 budget, which was assented to yesterday by the President, Muhammadu Buhari. And of course, we'll have a little bit of the implementation of the 2022 budget. It's right here on Business Morning on Channels Television. It's AFEX time now. Before we have that conversation, let's give you a little bit of how some of the crops traded on the exchange for the week ended the 2nd of January, where we see that total turnover on the AFEX commodity market summary captures over 79% positive change week on week, even though the volume traded dipped by almost 31%. Other indices on the summary board sustained positive sentiment, but the AFEX commodity index was just up moderately. Now, on the volume of contracts, we have maize, which had the highest movement from the 843.94 in the green to over 4.2 million in the red. Now, let's look at the crops individually. Now, we'll start with maize. It gained more than 2% to close at 236 naira 16 kobo. Clean sorghum gained also 3.68%, which is 10 naira 60 kobo, and closed at 298 naira 65 kobo for a kilogram. Cocoa is still on the rise and closed at 1,850 naira for a kilogram after adding 92 naira 90 kobo. On the flip side, however, we have paddy rice. It lost 1 naira 64 kobo to close at 3,137 naira 70 kobo for paddy rice. Soybeans, cashew nuts, they all followed in the negative trend, while wheat, cleaned sesame and ginger remained unchanged for the period. That's a summary of how those crops traded on AFEX Commodities Exchange for the week ended the 2nd of January 2023. Now let's look at something else, but of course still from the perspective of AFEX, and we'll be talking about overcoming the challenges in Nigeria's agri export market in the face of a lot of conversation about improving or boosting non-oil exports. We have rejection of export commodities that has defined the Nigerian export market over the years, among other challenges. And other African countries have also seen some of that. Nigeria faces a comparative disadvantage from a higher cost of production to a wide infrastructure gap, low utilized capacity in cleaning and processing commodities for export. If Nigeria must boost that export business, then these mitigants must be addressed. That's why we have Mr. Debajoti Bhattacharya. He's the Vice President of Commercials at AFEX, joining us all the way from Brazil. Good morning, Mr. Bhattacharya. Thank you so much for your time. Happy New Year to you.
Good morning, and very Happy New Year to you as well. Yeah. And it's a pleasure to be here.
Good to have you here too. Nigeria's agriculture export market over the years has suffered setbacks. We've seen that in yam, we've seen that in grains. In 2021, Nigeria's foreign trade deficit widened to 1.94 trillion naira. Did this gap make any change in 2022?
So the good news is that we have a positive trade balance of almost 3.4 trillion naira. If we just look at the January to September quarter, which gives us hope that we are going back to the numbers that we used to look at in 2018, when the trade balance was roughly positive by 5.3 trillion naira. The negative point of that is that all of this trade balance positiveness is coming from crude oil exports. And if we look at the non-oil export numbers, we are actually behind last year by almost 300 plus billion naira. So there is a lot that can be done. If we look at the numbers holistically, while the trade balance looks positive and it looks good for the future, the idea is that our dependence on oil as an economy is still very strong, and it still looks to be continuing that way. If we can even move up to the numbers that we saw close to 2019, which is 2.5 trillion, we are currently sitting at around 1.8 trillion. That's a 700 billion naira gap. And that needs to be addressed, at least hopefully in the quarter that has gone by.
Yeah, well, it'll be interesting to know how AFEX is helping to address that because other than oil, which you mentioned, we also see crops like sesame seeds, cocoa, contributing in the exported commodities. So it'll be interesting to know in what ways AFEX has influenced the market. These crops are on your exchange, you trade on them.
That's absolutely right. And the single point of focus is that the cost of exports has been increasing primarily due to the cost of logistics and the post-harvest losses that the farmers or the traders are facing when they want to store and take advantage of prices over the long term. Today, except for AFEX, there doesn't exactly exist a solution in the market where a trader or a farmer or a supplier can deliver their goods and wait for the prices to improve while they don't have any quality risk. So AFEX today has close to 150 plus warehouses across 26 states in Nigeria, where anybody can deliver the commodity, get the quality to be checked at the point of delivery at the warehouse, get an estimate of the price that they can get if they trade it on the spot, but also have an option to sort of wait for the prices to move in their direction and then get a better price. So this enables a better decision making. This enables a better quality of flow to the market, and at the same time ensures that overall Nigeria's quality and overall Nigeria's volumes is seen in a very positive light. So if we talk of example for cocoa, the crop sort of has been stagnant over the last 5 years. It moves between 310 to 315,000 metric tons overall. And this number for us needs to be doubled in the next 5 to 10 years. The cocoa associations in Nigeria are working towards it, but I think we still have a lot of distance to go. On the other hand, the cashew crops have been growing quite significantly. We have seen a CAGR of around 7 to 8% minimum over the last 3-4 years, and that's a very positive sign. So if you look at the number of cashew processing industries which have come up in Nigeria, I think that tells you how well the cashew market has been doing. And even with the volatility, because of the increase in the crop size, I think a lot of more investment decisions are coming in.
So you talk about boosting that, but what role can the government play when it comes to policies? Even though we do have a lot of policies in Nigeria, I guess the issue would be implementation of those policies. But how can we best promote this investment, especially from the angle of the government?
So I think there are a lot of things that can be done and definitely need to be done. One of the things which encourages sort of exports to be missed out by the government is the difference between the parallel market exchange rate and the official exchange rate. And the narrowing of this gap is something that creates more confidence in the industry and also makes it much more easier for registered legal companies to operate in the market. Second point is that we definitely need a solution on logistics. Today, it is taking this has been reported quite widely in the major news channels, that the cost of logistics from even a place like Ibadan to Lagos is almost the same to move a container all the way from Lagos to China. And that tells us that how inefficient the system really is. That's where I think the current impact requires we need some kind of a logistics solution, whether it's a logistics board, whether it's a fleet of trucks that the government can bring in and support smaller exporters with. I think that will be something that a solution can be proposed. In terms of another policy element is to encourage more and more processing within the country. We have seen great strides being made by our other African neighbors, and Nigeria has always been sort of the leader in manufacturing. So I don't see a reason why this cannot be extended by the current or the future governments to be part of the non-oil exports as well.
All right. Thank you so much, Mr. Debajoti Bhattacharya, for your views this morning. Obviously, we do need to boost those non-oil exports, and enjoy your stay in Brazil.
Thank you so much. I wish everyone, again, a happy New Year.
Wish you the same. We'll take a breather now, and then we'll come back and see if the minister is set with that budget breakdown. You're welcome back. This is still Business Morning, still awaiting the finance minister, and we learned she's at the venue now. We'll soon be heading that way. But just before that, let's have Will come to tell us. We know the market, the equities closed positive yesterday. I don't know about the fixed income. I guess that's your focus this morning.
Yes, in the fixed income market, well, we're still seeing bullish sentiments in that market. Yields are still dropping. A lot of, buy interest in the papers, but we don't even know what's driving that. But the yields are definitely dropping, and our analysts will be
MPC is
able to tell
coming,
us
so
that.
we'll see what that does to it.
Yes, but maybe the budget is already affecting people, as people are trying to buy as much as they can right now. I don't know, or just too much.
Or it's just the jitters for
election taking place. So we saw the Treasury bills market closing with bullish sentiments, as I mentioned earlier. The average yield contracted by 8 basis points, and that's for the Treasury bills. But for the bond market, it contracted by about 23 basis points yesterday. And investors, we saw a lot of buy interest was there for the 2049 paper. Investors are still trying to get as much as they can. But we're going to talk to Chuka Nwachukwu, is the group head fixed income trading at UBA, to give us more insights as to what's going on in the market, if anything is going on at all. Good morning, Chuka. Are you there? Okay, so we'll just head straight to the equities market and see how that performed yesterday. We're seeing bullish sentiments in the equities market. It closed 0.67% up yesterday to close at 51,595 points. If we could just have the equities market up there, please. So we saw the equities market up more than what it closed on Friday. It closed on Friday about 51,275 points, but now we're seeing 51,595 points there, and the market cap has now crossed into the 28 trillion naira mark. That's a big win for the market. Now, total volume traded declined by 63.9% to 321.67 million units. It was valued at 4.35 billion naira, and all in 4,122 deals. Now, we saw the stocks that drove the market yesterday. Boa Foods drove the market yesterday. It was up yesterday really strongly. And if we look at sectors, the sectoral performance, we saw that the banking, consumer goods, insurance were all in triple-digit gains, but except for the industrial goods, which was unchanged yesterday. Oil and gas closed in negative 0.02%. And we also saw that, looking at the market breadth sentiment was positive. 22 stocks gained when compared to 9 losers. So that's a good start for the market for the first trading day of the year 2023. Now, we're going back. We're going to go back to Chuka Nwachukwu, who is the group head of fixed income trading UBA, to give us more insights as to what happened in the fixed income markets. Good morning, Chuka. How are you doing today?
Good morning, Will. Happy New Year.
Happy New Year to you too. Now, we're seeing bullish sentiment still persisting in the fixed income space, Chuka. Yields keep dropping. Do you see this trend being sustained or persistent in the market?
Yeah, thank you. We've seen, like you rightly mentioned, we've seen a drop in yield due to liquidity in the system. We've seen huge liquidity in the system starting from last few days of end of last year, and then it continued yesterday and then today. So what basically is happening is that we've seen people trying to invest this liquidity in order for them to to escape from the CRR debit, if I might say. So I mean, we've seen high drop in yield, and so if you buy a short dated bill, for example, at currently trading around 5-6%. If you buy it for like 5%, it's better than allowing your liquidity to be taken away via CRR at 0%. So that's what we've seen so far in the market.
So that was what's driving the buys, the demand for the papers or for the fixed instruments we saw yesterday. Also, now we've seen that the budget, the 2023 budget, has been passed, and we're going to have the budget breakdown today. What are market expectations?
Yeah, so the budget that was originally proposed by the executive was 20.5 trillion. What was passed by the National Assembly was about 21.83 trillion. That's about an increase of the 1.32 trillion. So what market is expect is that election year, we will see a bit of a downturn in terms of economic activities. But however, with this, it has indicated the fact that the government will definitely borrow heavily. And so this low yield we've seen in the market will obviously will increase or will move further up after the election, most probably towards the second quarter. And so the market itself is a bit quiet and, of course, a bit hypertensive. I mean, should I use the word now? A bit, apprehensive in terms of what will happen during and after the election. So everybody is being quiet. I mean, everybody is being careful, and but we're hoping that the election will go well. Also, I would also like to mention that the government also passed the legislation also passed the supplementary budget of well over 800 billion, which was sent to it by the federal government. And then, of course, government has mentioned that they will use some of these funds for immediate activities, especially with the flood issues that we have. So this will also attract a lot of borrowing from the government, and then, of course, it will come to the fixed income market, and where we expect to see yield move up towards the end of first quarter and then second quarter.
Thanks, Chuka. So definitely from what you said, we're going to see the government making recourse to the debt market very soon, as they've always done, and more to come in 2023 because of the deficit. Thank you so much, Chuka Nwachukwu, Group Head, Fixed Income Trading, UBA, for sharing your perspective.
Thank you very much.
So, the equities markets closed.
Will, I have to say, that is
year to date, let me just say this, year to date, 0.7% already. That's good news.
It's too early to celebrate. But the way you said that, the government will always come back to the market, to get some money. That didn't sound so good, because it means our debt servicing is increasing, and it's going to affect you.
We do know, but it's actually what we're saying. The facts are telling us that they're definitely going to go to the markets, because where are they going to go? What alternatives are they presenting for this?
Yeah, when they go outside the country, it's even worse.
It's worse.
Because as of this morning, the dollar has started bouncing again. So that's even worse.
So domestic borrowings is what we're looking at right now.
Anyway, all right, thank you so much, Will. Well, let's head to the UK now and see if we have some good news in the UK. Juliana, good morning. Well, over here, we're used to the word subsidy, and when we hear subsidy, we think of petrol, or we think of the queues on the line. But over there in the UK, there's also subsidy, and from today, there's a new subsidy control regime that comes into force. What are the new rules, Juliana? I know this is not about our own petrol subsidy.
Good morning, Innie. No, it isn't about petrol, but it is for beleaguered businesses who we know in the UK have been struggling to get back to shape after the pandemic. And this new subsidy control regime, which is being launched today by the British government, has been in the works for the past 2 years. And really, it's a way to divorce UK local councils away from the European Union. So if you were a business pre-2016 who was eligible for subsidies from the British government, you had to go through a pretty bureaucratic, long-winded process with Brussels, and many businesses were having offers rejected. As soon as we left the European Union, divorced our biggest trading partner, this new regime was put in place, and it is being launched today to basically give councils more control over where this money does end up, giving beleaguered businesses an opportunity to access greater funds. And as I said, this has come at a really important time, because we're only 4 days into the new year, but already I'm seeing reports, Innie, of businesses saying they're on the brink, people already saying they're skint, which is a colloquial term here for being pretty much broke after the festivities of Christmas. So yeah, this is great news for Brits, and I suppose when Parliament is recalled back on Monday, we'll be hearing more details about exactly what sectors are going to benefit most from this.
Yeah, Juliana, but the food inflation hits everybody. In December, it stood at 13.3. I wonder what it will be at the end of January.
Yeah, not great, particularly as, last year a couple of weeks ago, we were told that perhaps inflation had peaked because it is, contracting slightly, but not when it comes to buying your food. The British Retail Consortium have released data this morning showing that in December, food reached 13.3%. A lot of the upward price has been allocated to the war in Ukraine. We know that so many animal feeds and other produce that was exported from Ukraine and Russia have just gone up strikingly. And it's not just wheat, it's also fresh food. So the likes of milk, eggs, dairy, they're all very, very expensive. Now, we are going to be finally hearing a statement from the Prime Minister today. He has been particularly quiet. Of course, it has been Christmas over the past couple of weeks, but I think particularly union bosses, beleaguered workers, they're eager to hear from him. Is he going to talk about the cost of living? According to a Downing Street spokesperson, Rishi Sunak is going to be using his New Year address this afternoon to talk about education, which is good. And we know that education, of course, is an investment for the future, but I think people want really to talk about the cost of living and how we're going to get ourselves out of this mess and to regain some consumer confidence. But yes, inflation doesn't appear to be going anyway fast. And as you said, let's wait to hear what it's like at the end of the month, as people are pretty much using leftovers to survive at the moment, which is pretty typical in January, isn't it?
Yeah, typical of January, Juliana. Just got worse, with the war and all of the inflation and the hikes increase and all of that. But anyway, thank you so much, Juliana. We'll talk to you at 1:30.
Talk to you then.
All right, so let's move to the crypto market now. And Ladi walks in with the numbers of fearful numbers.
Fearful numbers, but it was Bitcoin's birthday.
Happy birthday, Bitcoin! But you didn't bring us good tidings on your birthday.
14 years. I was seeing some strengthening this morning, with the price of Bitcoin. So
just for celebration.
Yeah, just to celebrate the 14 years. It's been a while, but still a young asset class.
Yeah.
Yeah.
Still a child.
Still a baby, really, right? Let's look at the Fear Greed Index now. 29 points, much better than what we had yesterday. Yesterday, about 28, 27 points. But now, we're still in fear, though. Some traders still expecting some kind of greed sentiment sometime this year. But obviously, with the headwinds there, macroeconomy still weighing on the market, we might not see that. But let's look at the market cap there, 819. Staying deeper in that level, up 1.25%. But Ini, I'm going to throw it back to you now.
Yes, I think what we've been waiting for has finally come to pass. Reminds me of a song. Julia, thank you so much. I guess we'll have more details tomorrow. So we've been talking about it from the beginning of the program here on Business Morning, that the Minister of Finance is expected to give the breakdown of the 2023 budget, and she has just started that. So it would be good to listen in, especially on the implementation and the success of the previous budget, 2022. And of course, we'll see the list and details for the 2023 budget. That's where we'll draw the curtains on Business Morning.